Hello, everyone. Welcome to the panel. Thank you for being with us. Could you please briefly introduce yourselves, and then we will introduce the discussion that we will be having about the digital euros.
Okay. I was here half an hour ago, so I will be short. I'm here somewhere to represent traditional finance, observing a lot what is going on, in particular since the mid-2010, observing a lot, being very positive about the future, and here to exchange views with my 42 years of background of financial industry. Yes. Yeah.
Okay, Guido Rocco, Chief Operating Officer of RIV Capital. RIV Capital is a multifamily office based in Luxembourg, active in the world of traditional finance, but lately also in crypto, in blockchain. We will be launching a layer 1 sovereign blockchain on Cosmos before the end of the year with a cryptocurrency which follows a hybrid reserve model. It's not a stable coin in the sense that it's not pegged one-to-one to fiat currency, but it has a hybrid collateralization model. So I'm happy to be here. Thank you for having me.
Thank you.
Yeah, I'm Jón Egilsson. I used to be the chair of the supervisory board of the Icelandic Central Bank. But after that experience, I got involved in the technology, the blockchain technology, initially in 2012. And then when Ethereum launched, I saw a great opportunity basically to rewire banking in general. And if you're going to do that, I thought that you would need to put regular money, fiat money, on chain. And we were the first company to issue licensed and authorized stablecoin many years ago, before it was called stablecoin. We have focused on the euro from the beginning. We are an infrastructure company, so we support wallets with our product. Probably many of you haven't heard about Monerium, but we had about 54% of the volume with regards to euro stablecoin last year. And number 2 was Circle, and number 3 was Tether. So it has been a very interesting change from being in a central bank to basically working in this very exciting new sector.
Perfect. And my name is Artem. I represent Oak Research. I'm the founder. We are an intelligence platform. We publish long-form reports, work with various protocols, and I've been in this space for the past 6 years. So let's move on to the topic, and let's talk about euro stablecoins, e-money, digital euro, whatever we want to call it. There are many names for that. And I guess one of the first questions that we can introduce is, for example, today, all the money is kind of already digital. Besides cash, everything is on our phone. It's just numbers on the screen. And with crypto, we have this new thing where we just have numbers that appear on our wallets. So I guess the first question I would have is, what's the difference between the digital money that we have today and then the euros that we have on-chain, so we can call it like on-chain money? And when we move from one product to another, there are always winners and losers. So who is the winner here? Who's the loser? What's the difference between the two? I guess we can start off by that.
You see, I'm really looking forward for the digital euro because
you're the first person I've met to say this, actually.
Yes, I'm really. Why? Because the digital wallet is, for me, something very abstract, even though I'm forward-looking, but I'm coming from another age. And I think that if we want really to go deep into democratization, into moving big step forward, this is the way to go, because it's still, you know, how many colleagues do I have who were bankers with me over decades? They cannot even imagine that I'm sitting here at Cosmoverse 25, you know, and there's a long way to go in order to, at the end of the day, we need something which is open to all European citizens, which is not the case today. We are still in very low level of adoption, and we need to go much, much further in front of us. And I expect the digital euro to go into this direction. The only thing I regret, I was here yesterday morning, 2029, oh gosh, I expected it much, much earlier, and it's amazingly late, but I'm quite waiting for this,
First of all, we have a digital euro. It has existed in 25 years. We don't need to wait until 2029. That is not an issue in my mind. You asked a really good question. Why on earth, we would like to use a stablecoin? And in my mind, there are many reasons, and I would like to mention three. Number one, the bank account is more or less dead because we don't need the bank account anymore. If you have a token which is licensed and authorized, you can hold it yourself, okay? You can hold it on the blockchain, and that is a great benefit for everyone, because if you have your money like that, you can choose whatever solution or wallet that you like to basically use that asset. So that's really good. For society, that's also really important. Imagine the European Central Bank. They have 50,000 people working for them. 50,000 people. What are those 50,000 people doing at the European Central Bank? To a large extent, they are making sure that your deposit, that bank deposit, is safe, because we rely on it. But we have a better solution. We don't need to rely on it. And that is gradually happening. That's number one. Number two, then I have a son in the US. If I want to send money to the US, I just send my euros to the US. My son, he exchanged it for the euro, for the dollar. No problem. No bank, no cross-border payment, free. It's so easy. And number three, stablecoins are based on, in Europe, on the e-money legislation, 25-year-old directive, and the Genius Act is in some way similar, in some way not. And that means that the underlying funds are segregated. It is not the issuers. And it is kept in high-quality liquid assets with many counterparts, meaning that if you compare it to a bank deposit, then you have one counterpart. If that one counterpart goes bankrupt, then we have all the infrastructure, the central bank as a lender of last resort, the safe deposit schemes and all of that. But in this case, you have many counterparties. This is your money. You have a claim on the money, not on the issuer. So I would argue that this is much safer than any bank account. So these are three reasons, and I don't have too much time, so I'm going to stay with that.
Yeah, I completely agree to what Jón and Roger said. So what's the difference between digital money and on-chain money? Of course, the technological difference. The on-chain money is on a distributed ledger, it's on a blockchain. The real thing that we have to ask ourselves is why someone would want to use on-chain money rather than digital money. And of course, there are all the reasons that we already know. Faster settlements, cross-border payments can be settled quite instantly. But a theme that is really worth mentioning, I think, is the one of the democratization of wealth and the possibility to extend to the unbanked many services. I think the reason why we want to go into this direction is to democratize the access to financial instruments, to money, to wealth. And this alone is probably a very powerful proposition that I think we should consider.
Yeah, I just want to push a little bit back on what you guys said before, especially Roger, because I think there is one thing about the digital euro that we kind of have to acknowledge here. It's the fact that for the moment today, it's the banks who are responsible for custodying your money. With digital euros and what we have in crypto today, we are the ones who are custodying it and who are responsible for the security of our deposits, for our seed phrase, etc., etc., etc. So it introduces a new level of responsibility for people. And I think many people are not ready for that. This is the first thing. And I think the fact that we are developing this with Europe, Europe is working on it and pushing it onto all its citizens, while today, if we want to talk about adoption, literally anybody can just create a wallet and have their own USDT or euros or whatever in their wallet. So it's still a choice. And I don't think that digital euro will actually allow a better adoption of the crypto industry. I think it will introduce a new way to receive your payments or whatever, but I don't think it will open up the gates towards the crypto, because the people that want to be in crypto today, they can already do it. They don't need the digital euro. So this is my kind of point of view on the digital euro. And then, on the other hand, we will have a bunch of private actors that will all release their own stablecoin. And then here we hit another hurdle, because today we're already seeing a fragmentation of liquidity, a fragmentation of various stablecoins, and we don't have a unified standard for this stablecoin. So, for example, if we are talking about various blockchains, various bridges, various wrapped tokens, if you want to bridge USDC from one blockchain to another, you may receive USDC.E, for example, on Arbitrum, or have another standard on new blockchains. And so it introduces another level of complexity. And so I guess these are the two things I wanted to push back on, and I would like to hear your response about this, about these things. But I do think that crypto in general and digital euro, if we want to call it a crypto, it introduces a new level of complexity that most of the people are not ready for. And I think the current state of the industry is too complex for the people to freely enter and understand it from their first try.
Yeah, earlier today we had a speaker from Trustee. It's just one wallet. And they were saying that they are offering both self-custodial and non-custodial, or non-custodial and custodial. So this is basically the market responding to your concerns, and the market will solve that, and we see that. If people don't feel secure holding their own keys, fine, someone is going to take care of that, and that is really important. But for many, that is not necessary. I'm absolutely outside of the banking system with fully legit currencies. With regards to liquidity, then you have to make a distinction between two things. So under both MiCA, Genesis, and other legislations around the world, then if you are a direct customer linked to the banking system, for example, if you are using some of the solutions that are based on Monerium, then you are connected directly to the banking system. So basically, you get a bank account number. That is how you interact with this. You connect it with your wallet, and all the money that goes into this bank account is going to be minted into your wallet, and then you do whatever you want to do with the token, and then you want to go back, you go back. So that is infinite liquidity if you are connected to the banking system. Now, in the secondary market, shall we say, on-chain, then you need these pools, right? And that has been an issue for smaller issuers over the years. And that is something that the private market has been working on heavily. And, for example, sharing the liquidity, that's an important feature. And there are other solutions coming up which are helping on this front. But it's absolutely true that this is crucial, and this has to be better, and I believe that we will see in the next 6 months that this is going to be solved, more or less, because of basically how technology is going to solve this.
Yeah, I think that you mentioned a good point when you spoke about the complexity of these instruments. Crypto is not easy for everyone. We have a bias since we know how to use wallets, and we think that everyone can use it. But it's actually quite hard. And of course, you can have custodian wallet, so the person doesn't have to have the burden of owning the seed phrase and to take care of the custody of its seed phrase. But what I think is more important is to build the technological means to make the user use blockchain and distributed ledger protocols easily. For example, we in RIV, we are doing that. We are focused on the customer. We built a full stack of products, not only the blockchain, the tokenization platform, but also a wallet that's very easy to use. So why we did that? Because we think that the new world, if we want the blockchain to coexist, to live with the current financial system, if we want to integrate the traditional world with this new world, it's important to have the right technological products to make sure that everyone can use it. So I think the problem is this one, is to make things easy for the user. That's what's happening with every technology. We use internet, but I don't know how many of you know how the internet protocol works, how FTP works, but we use how HTTP works. Same will happen with the blockchain. We will use tools that will allow us to use the blockchain without even realizing it.
Yeah, I do think that we are using internet for whatever reason without knowing what's behind it, yes, but here we are talking about people's savings, people's money, so...
This is true, it's more delicate,
It's more important to understand what you're doing and where your money is going and how you are actually managing it, so I think it will be kind of still important in the long
That's
term.
why the risk, you have to make sure, of course, if you have custody of the crypto of user, you have to have a level of compliance which is way higher, of course, than any IT company. This is for sure.
Yeah. I just want to talk about one of the main things and the most important things about stablecoins. It's why would you hold a stablecoin today? I think most of the people see it as a way of having a savings account or earning yield on it. However, under MiCA, the stablecoin issuers are not allowed to issue yield. So why would you want to hold a euro stablecoin? Why would you not pivot towards something that actually earns you yield and allows you to basically gain some money from it?
Yeah, that's really important. Stablecoin is just a digital version of cash, and it doesn't accrue interest to the user. This is a payment instrument, okay? And the wallets that you can use today, they are connected to cards and so on. They basically take your funds, let's say you have 1,000 euros in your wallet, and then you can just program it and say, well, I like to have the majority of my funds in a tokenized money market fund, or stake it, or do whatever else with it to basically earn yield. You can do that. So you don't, if you want to earn yield, you just don't hold the stablecoin, you see? But when you need to, because this is just a token, and through atomic swap, you just swap it for a euro when you use it. That's how it works. And the beautiful wallets that we're seeing, they are just making this happening for you automatically. So you don't need to bundle together a cash instrument, which is non-interest bearing, and something which is interest-bearing. I mean, you might want some interest-bearing asset which is more riskier than you know. We just, this is something you configure in your wallet. So I don't think this is a problem at all.
But for example, when you hold euros on an app like Trade Republic, for example, or Revolut, it earns you yield directly in your account. So what you're explaining, it introduces a new level of complexity, or basically it means that you are giving up this yield to other applications.
Yeah. So basically, the wallet developers, they're just abstracting this away. So you hold euro, but you define what kind of interest you want, and what you get is a function of the risk that you're willing to take, okay? Yeah. They abstract that away for you. So you say, okay, I want to hold the euro, but when I'm not using it, I want it to be invested in this and this and that, okay? And this is what the private market is doing. This is better than tokenized deposits or whatever. You know, you are in control of your money. You say, I want to earn yield or earn interest in these and these and these instruments, and this is done for you in the software. The wallet does it.
And the traditional world does it for the last 200 years. Because I was a trained private banker and basically define the risk and look in which asset class we want to invest in the old world. And basically the same happens in the new world. Understanding what you say, it's the consumer will decide
exactly.
what he wants to do, and the opportunity is here.
Yeah.
Nothing changes. The platform is changing.
The platform,
yes.
platform has changed it,
Yes.
and it's made it easier. It's more efficient. And, you know.
I have one last question because we're running out of time. But my last question is, who actually wants to hold euros? Because I think it's a fair question to ask, because today we have the global reserve currency, which is a de facto dollar. Basically, everyone wants to hold dollar to get exposure to the United States, et cetera, et cetera. And when we are looking on chain, the US stablecoins market cap is over $300 billion. We are seeing Tether, which has a huge, which has over 180 billion in USD. When we're looking at euro stablecoins, today we have a relatively small market cap for those comparing to the US dollar. And so my question is, who would want to hold euro stablecoins? And then can it become like an alternative for dollar, or will it be always the number two and only reserved for payments for Europeans?
So if you look at the reserve currencies of the world, you know, what central banks are holding, they hold the US dollar. That is the biggest reserve currency. The second biggest currency is the euro, okay? It is barely existing in stablecoins, and there's a reason for that. We didn't go into that. The European Central Bank is a big part of that. But the same should apply on chain. You know, why, the central banks around the world, they're holding the euro. Why wouldn't you hold the euro just as the US dollar? Of course you would hold the euro. There is no reason why not. The right question in my mind is, why is it that the euro is not more prevalent than it is? And I think the answer to that is that we have a public body, which is called the European Central Bank, which has been boasting for years that they will issue a digital euro. And if anyone understands anything about VC funding, then if a European company goes out and say, we would like to produce a European stablecoin, okay? We're talking to these VCs. There are not many good VCs in Europe, sorry. But still, let's say that you manage to convince them. Then they'll say, okay, are you really going to compete with the European Central Bank? Of course not. This has been detrimental to the stablecoin, the euro stablecoin sector for years, and it's continuing.
Yeah, I would say, who is going to use euro? I think European citizen would prefer to hold the euro over the US dollar. I'm a European citizen, I come from Italy, and of course I prefer to hold my savings in euro rather than US dollars. The question is, I think the question is why euro stablecoin are so lagging in terms of market capitalization. Jón pinpointed a very good point.
I should add Mika as well, but that's another story.
Yeah, also, there is a thing that mainly in the United States, innovation comes first and then there is regulation. While I feel like in Europe there is first the regulation and then the innovation. Of course, if you regulate before, you somehow cut off the possibility of innovating, because innovation, for its nature, is explosive. So I think this approach is also one of the reasons why it's still lagging, the euro stablecoin. Can this change in the future? Of course, I think it can. I'm optimistic. USDT, USDC, all US stablecoin came earlier, They had the first mover advantage that we have to consider. Europe has a lot of national and supranational institutions, fragmented capital markets. Innovation is a little slower in Europe compared to States. So if we sum up all these things, we understand the reasons why the European stablecoin is lagging. But of course, I'm very optimistic about the future, and I'm sure that that in the future also Europe will have a stablecoin.
Yeah, I'm not that optimistic.
No.
And you know, finally, just to let you know, because this is a concern. I mean, when I'm observing what is going on for the last 25 years, US doing better, and better, and we do not. And look, the huge gap that we are currently, and this is nothing to do with Donald Trump, this is 25 years of difference where these guys are systematically doing better than we in Europe.
Yep.
And that's it's also related to the question about the stablecoin in euro versus US dollar. They just do it better. And we should, frankly said, we should really wake up because time flies. And we have Asia, and further down the road, in 30 years, we have Africa. So we should better be a little bit...
yeah, but I feel like we've been saying this for so many years now, and we're saying that Europe is always late, that we always regulate before we innovate, and it's kind of... We keep repeating this and hammering this down, but it's kind of never changed, because the people who are making the decisions, they are the ones who are slow, and people are telling me that we should go. So thank you very much for listening to us, and please give it up for the speakers.
Thank you.
Thank you. Thank you.